Hello, this is Solomon Tesfaye. I'm the Chief Business Officer at Aptos Labs, and you are watching Taking Stock.
2 minutes to go here into the closing bell. Time to rock and roll with another set of all-time highs for the S&P 500, the small cap Russell 2000 index, as well as the tech-heavy NASDAQ. And in honor of this incredible National Investing Day, look at this incredible group down here on the trading floor, and the crowd goes wild on the Friday. Joining us. Let's go. Thank you, everyone, for being here. Invest, invest, invest. The great Einstein of Wall Street, Peter Tuchman, kicks us off. All-time highs to end the week.
Amazing.
Fifth consecutive week the S&P is up.
Enthusiasm in the market's unbelievable. What an amazing week. Closing out April, look, what did we say? It was the best month that we've had since November of 2020. That's a mouthful right there. Amazing. And we came in back again today. We are not hitting up any resistance. Tommy Lee said, look at 7,700 on the S&P 500. How exciting is that? You know, at that point, we may look at and see if there's going to be a little resistance. But until then, the market is strong. It's resilient. We've had stock to buy all afternoon. I mean, it's a great way to end up a week. It's a great way to begin May. Right, the old adage of sell in May and go away.
Yeah, what happened to that?
You know what?
It's
We're
only
not there
Thursday.
yet.
It's
the
only
only
Thursday.
Let's give it a break. Let's sit back and pause for a couple of days.
And everyone down here, they're excited for the markets, but they are doubly excited to see
This
you.
is the next generation of
You're
investors.
not kidding. The future investors
Yeah,
from the New York
let's
Stock
go.
Exchange. The great Einstein of Wall Street, thanks for being here. Time now for the belt. Why not? Hit the gavel as much as you want. It's Friday. Vibes are high, as are the major market indexes. Your final tail of the tape on this Friday, May 1st. May 1st already? Yes, it is. The S&P up 0.3%. The Dow 30 components down 0.3. The New York Stock Exchange Composite Index down about 0.5%, and the small caps, the Russell 2000, in positive territory, 0.46%. We'll round up, call it 0.5% for the gain. All-time highs for several of those indexes. Also catching a bit on this Friday tape, the major airlines doing very well, led by Frontier. The fintech stocks with a strong outperformance from Affirm. The software stocks having a nice bounce back. Been a tough go of things. Datadog there, the top dog out of the software names, and the semis having a strong tape, led by Intel. The crypto majors having a strong day. We'll talk a lot more about those coming up here in just a bit. Apple, the outperformer out of the Magnificent Seven, just 1 day removed from their quarterly results. Nvidia shares down fractionally. Let's bring in our first guest of the broadcast, longtime friend of ours here on Taking Stock, Melissa Otto, head of Visible Alpha Research at S&P Global. Melissa, thank you for being here to kick off the broadcast. As always, we got all-time highs for tech, for the Russell, for the S&P 500. I'll let you kick things off. Where do you want to start as you look at another history-setting day?
Hey, JD, happy Friday. What an exciting week it's been. For me, the standout was really Google and their cloud business. I mean, what a beat they had on both the top line and operating profit lines. That business is firing on all cylinders and drove the outperformance this quarter. What's exciting about that is I think this is the really the first evidence that we're seeing an ROI coming from the massive CapEx spend that the company is having, and it's trickling right into that Google Cloud business. However, for the other cloud providers, those numbers were more or less in line with expectations. Still a strong quarter by Amazon and Microsoft, but not the blowout that we saw at Google Cloud.
Does that CapEx enthusiasm therefore stretch to a few of these other names that we also heard results from the last few days? Melissa, Meta, Microsoft, Amazon, what else has been on your radar? It's been a busy 48 hours.
It certainly has. I haven't slept. I would say, Apple was really interesting, in the sense that, they talked about some of the real demand coming into iPhone and for the new Mac models, which was exciting. That could potentially be very good news for the second half of the year, particularly when we have back to school and holiday spending those 2 quarters tend to be very important for Apple. It'll be interesting to see if we see compelling upward revisions there. The second thing too is that the company spoke about really focusing on their artificial intelligence strategy. It'll be exciting to see if we start to see much broader adoption there, and if that could be that catalyst we're looking for consumers to really upgrade their hardware.
CEO transition with incoming former hardware chief, incoming CEO John Ternus, also top of mind for Apple investors. Melissa, I want to get your take on the Fed. It's the first time you and I have spoken since we had Jerome Powell up there at the podium on Wednesday. I think that was Wednesday. They all blend together for a week like this, but saying, hey, I'm staying on as a Fed governor. What do you make of that decision? We heard from outgoing Chairman Jerome Powell. And how does all this set the stage for incoming Chairman Kevin Warsh?
It's certainly fascinating. I mean, he wants to continue to have a seat at the table and ensure that the transition is smooth. He's got a lot invested in what has happened over the past several years since he's taken over the role as chairman. And I think, wants to ensure we have a smooth transition and that the Fed continues to remain independent.
All right, we'll have to leave it there. Melissa Otto, you were very generous to adjust the production plans to still be able to join us on this Friday afternoon. Very grateful for your time, as always. Melissa Otto, head of Visible Alpha Research at S&P Global. My friend, take good care. We'll talk to you soon. Enjoy your weekend. Todd, you and I are going to head this way for a walk. We'll bring our viewers here the latest quarterly result expectations. Give a wave. Welcome, everyone. It's great to have you all. Earnings previews for next week here on the street. On Monday, we'll hear the latest results from Berkshire Hathaway, Palantir, Duolingo, and Pinterest. Tuesday, May 5th, Shopify, PayPal, Pfizer, AMC, and AMD both reporting after the close Tuesday. Wednesday, the House of Mouse in the morning, Novo Nordisk, as well as rideshare giant Uber. Thursday, the 7th, go ahead, boss. The latest from Datadog, McDonald's, Coinbase, and Opendoor. Next Friday, the 8th, the team from Wendy's will report before market open. JP Morgan says 80% of companies in the S&P 500 that have reported so far have beaten on those earnings expectations. We will see if that momentum can continue into next week. We'll take a look at one notable that calls the New York Stock Exchange its home, and it's also set to report on Monday. This is Norwegian Cruise Lines bouncing back after choppy seas, so to speak, over the last few weeks. The stock is down 16% year to date, but it's up 16% over the last 52 weeks. Go figure. The average one-year price target on the stock sits at $24.30. Upside potential off these levels of another 28% or so. Norwegian Cruise Line set to report first thing Monday morning. Yesterday on the J.D. Durkin Show, the only live independent show from the trading floor of the New York Stock Exchange, I spoke one-on-one with our good friend Scott Melker, also known as the Wolf of All Streets. We talked all about crypto price action, Bitcoin correlation, and much more. Take a look. Let me ask you about the central bank. Jerome Powell out, Kevin Warsh in. How much does Fed leadership actually matter for Bitcoin?
Well, Jerome Powell's out-ish.
Right. Out-ish, correct. He will still vote on the FOMC for the time being.
But lurking awkwardly in the corner and watching. But yeah, I think it shouldn't matter much because I think that largely we're in a fiscally driven environment, and the Fed itself is actually effectively neutered, because I don't think that cutting or raising rates matters much right now when you have a deficit approaching $40 trillion, and really the levers that need to be pulled are probably at the Treasury. That said, I mean, Kevin Warsh, Daddy Warsh bucks, as I like to call him, guy's worth billions of dollars. Oh. He's married to Estee Lauder, the granddaughter of Estee Lauder, worth 190 himself, and has over 30 investments in crypto. And I looked at his portfolio, and he's invested in stuff I haven't even heard of, right? And I do this stuff all the time. I mean, this guy is a crypto degen of crypto degens. He gets it. So listen, there's the one cynical take that says, like, this guy's going to trade to benefit his, or he's going to make policy to benefit his portfolio. That's absurd. He's divesting everything in advance. But I am of the strong belief, call me crazy, that the person who creates policy on something should actually understand it, right? And so having octogenarians and nanogenarians, or whatever we call them, deciding what policy will be around financial markets in general, but certainly around new technology, crypto, AI, things like this, it's absurd. They have no clue. They have some staff member who's probably 70, young, who's advising them on what to do. And so, I think it's a net positive in general to have somebody younger who's touched the industry in power. And we have that at the SEC, we have that at the CFTC. Now we're going to have that at the Fed. It's across the board.
Scott, you mentioned a lot more suits that you see at events like the Bitcoin conference. Who is more responsible for driving crypto price action today? Is it retail or is it big banks and asset managers?
It ain't retail. You could look at a chart, I believe it was from River, that showed Q1 of 2026, and I believe 69,000 Bitcoin were added by institutions and 61,000 Bitcoin were subtracted from retail. So I think it's pretty clear that retail has not participated. So once again, you can take a glass half empty or full view of that, right? In the depths of bear markets, you generally don't see retail participation. If you get a slight uptick in that, imagine how good it can be. And I've kind of always joked that higher prices are the best marketing for Bitcoin. If we're all of a sudden at 95 or 100 in a couple months, people will be interested again and retail will come back. And that smart money, the institutions will already have packed their bags, right? So if you see quote unquote weak hands handing off their Bitcoin to strong hands, that's usually a pretty solid sign that you're on the wrong side if you're selling here.
Scott, what do you think far too many investors, especially in the lane of traditional finance, still get wrong about crypto?
Everything. I think that we still have the anti-crypto army screaming about how Bitcoin mining is boiling the oceans and it's only for North Korea and hackers or drug dealers and things like that. And I think it's taken a long time to shake that stigma. I also think there's a unfortunate conflation of Bitcoin and everything else. In my mind, there's Bitcoin and then there's the crypto market, and they might as well be completely separate markets. And that's not an indictment of the crypto market. I just don't think that they trade the same, and I don't think that they're based on the same thing if you're looking at valuation. So I think there's a lot of reasons. Listen, we have a long, storied history in the crypto industry of turning around, kicking the ball into our own goal, shooting ourselves in the foot, whatever analogy you want. Like, we have own goals like no other industry has own goals. FTX, Celsius, all of that. Now, hacks across DeFi. Certainly, the Trumps extracting maximum value from retail via crypto is not helping. So those are problematic. But at the end of the day, you can just buy Bitcoin and chill, and life will be good.
Welcome back to the show. Bo Kotecha joins us now. He is the co-founder and CEO of Paxos Labs. Bo, very grateful for your time on this Friday afternoon. So you just launched Amplify. It's a platform helping companies build and run their own stable coins, coming at a really important time. Talk to me first and foremost, what are the key problems that you believe you are solving?
Yeah, so, as you've mentioned many times on your show, more and more institutions, platforms, fintechs, exchanges are adding crypto capabilities to their platforms, and they often start with maybe some form of stablecoins or maybe some form of digital assets like Bitcoin. What our Amplify stack helps customers and platforms do is actually build utility on top of that. How do we help you brand those assets on your platform? How do we help you generate yield on them? How do we help you turn on borrowing? Build utility around these products so they actually become a core part of your platform and not just a feature or not just a payment rail.
I got to get your take on this new exciting partnership with Toku. At least it looks exciting from the outside. You're bringing stable coins into both payroll as well as the general compensation conversation, Bo. Is payroll the first real everyday use case for crypto?
Yeah, I mean, we're seeing billions of dollars of volume of payroll going through stablecoins today, right? And I think Toku is an incredible platform, and they're paying folks across many countries. And so I think what's really interesting about our integration, our partnership with Toku is, hey, not only are we enabling people to get paid in stablecoins via Toku's platform, but now via Paxos Labs Amplify, all of these people that are getting paid in stablecoins on the Toku platform can immediately start earning on it, right? So you can imagine now how these stablecoins are becoming a new kind of financial platform for a lot of these folks across the world, and really kind of replacing their bank account, right? Where they might have received payroll somewhere else in the past. Now they're receiving it in stablecoins and immediately earning on it. And so it's kind of an upgraded global dollar account for anyone across the world.
Where are institutions actually using stable coins today, and what is still missing?
Yeah. So I think there's a couple camps, right? So you're seeing some institutions implement stablecoins as a new payment rail, right? And so it sits alongside some of the existing payment rails they have, and they use it when it's beneficial to do so. So I think that's one class of customers that are doing that. Some are putting their brand on it and building kind of specific experiences around it. You think about someone like PayPal who has their own branded stablecoin in the market. But I think more interestingly, there's this kind of emerging class of platforms and fintechs that are using stablecoins as kind of their atomic unit in their platform. And they're building everything on top of that, right? Saying the stablecoin is the primary account, and then we're going to build all the financial services we want to offer off of that from the ground up. And that's what Paxos Labs and our Amplify suite helps them do. And so that's the really interesting kind of evolution we're seeing take place, where it's people are trading stable coins as this kind of new platform to build financial services on top of, and we help them do that.
I got less than a minute left. Quickly, if possible, what does it take for a stablecoin to actually become quote unquote institution grade, Bo?
Oh man, I think a lot of what you have to look at is, do you have the right backing, right? Are you backed by the right types of assets? Do you have a level of transparency and security that goes into those stable coins that give institutions the trust to build it, right? And so obviously now in the US, we have a framework to do that with the Genius Bill. And I think a lot of other countries are either have their own or are scrambling to put one together. I think that regulatory clarity and then businesses that are able to stack up to that regulatory bar are important for us to get stable coins in the ecosystem that institutions can trust and use.
Bo Kotecha, co-founder, CEO of Paxos Labs, really grateful for your time on this Friday. Enjoy your weekend. And folks watching at home, don't go anywhere. A lot more Taking Stock coming up live from the big board after this. Welcome back to the show. Cheddar's very own Justine Miller sat down with Morris Pearl of Patriotic Millionaires, and they discussed why some of the wealthiest Americans are actually pushing to pay higher taxes, even for themselves. Take a look.
With major budget deficits and growing costs, one group of Americans is saying that they want to raise taxes on themselves. Joining us now to learn all about this is Morris Pearl, chairman of Patriotic Millionaires. Thank you so much for being here.
Great to be on your show.
We really appreciate you being here. We want to learn all about this. So first, tell us a little bit about Patriotic Millionaires, what it is, what its mission is, and why it matters.
Sure. We've got hundreds of rich people around the country who really understand that they don't want to live in a country with a few rich people and lots of poor people. That doesn't work even for most of the rich people. I want to live in a country that my children and my granddaughter have the opportunities I had when I was growing up. And that's not an oligarchy. So we need to have a little bit less inequality. We need to be able to show the people who are working hard every day and barely getting by that the government is going to do something for them, not just for the very rich. Or else they're going to just, frankly, give up on everything in democracy, and that's not going to be good for anybody, including the rich people.
Yeah, it's really interesting to think about all of these different groups within society and how everything works together. All these different people and their different attitudes on taxes and all of this really work together within the economy. So tell us a little bit more about exactly what this money would go to. Is it city, federal, is it state, and also is it earmarked for specific things, or is it just in the general tax fund?
Yeah, mostly we work on federal policy. What we're working on isn't so much spending money on something. Most of what we're working on is making the tax system more fair. The problem is the reason that people like me are getting richer and richer and richer, and people who get a paycheck every week are barely getting by because they've tax deducted from it, are that even if I don't make any more money, I don't pay taxes because I don't work. I get income from my investments. And that if I'm getting income from my investments and not paying taxes, and you're getting income from your labor and getting tax deducted from your paycheck every week, then the people who are already rich are getting richer and richer and richer. And that's what's making people give up. We're not saying the government even needs more money, although in some cases it does. I do want things like pre-K here in New York City.
Yes.
Because that draws people to our city, and that's one of the reasons people want to live in New York, is because of all the things that we have, and frankly we need money to pay for all those things. But the main thing we're concerned about is the unfairness of the tax system. The way our unfair tax system is helping the rich get richer and making people who work for a living just unable to get by.
Yeah, and for those people who are looking at this and saying, okay, well then more taxes would be collected, is there any direction in the policy that you're trying to advocate for about where that would be sent to? Or, you know, we have the billionaire's tax that is going to be on the ballot in California coming up that's earmarked just for healthcare, 90% of it at least. So is there something similar to this, or this is just going to general taxes?
No, actually, the first bill we proposed, the Working Americans Tax Cut Act, cuts taxes for people that earn less than $45,000 a year, but increases taxes for people that earn more than $1 million a year. So it's actually revenue neutral. You'll have the government get the same amount of revenue, but get less from people who are, frankly, not earning enough money to support their families, and get more from people who are earning far more than enough. So we're not actually even proposing the government's revenue increase. We're proposing the tax system be more fair and make less inequality in our country.
So more of a redistribution in a way.
In a way, yes.
Yeah, and thinking about that, you know, we've talked about some people who have 500 million, 800 million, billions of dollars wouldn't even know if their taxes went up. You've mentioned that it wouldn't even, you know, be such a burden on them. What do you say to the people who are closer to that $1 million income bracket area? Obviously, you know, it's not nothing, but those people who might feel it a little bit more than the people who have astronomically more than that.
Honestly, people who are earning $1 million a year in earned income, I can assure you they can afford to pay a few $1,000s a year more on their second million of taxes. We're not increasing taxes at all on someone earning $1 million a year. Our proposed bill is only increasing taxes on their second million. And honestly, most people I know are more worried about their first million than they are about the tax in their second million.
Well, it's very exciting to learn all about this. Thank you so much, Morris Pearl, Chairman of Patriotic Millionaires. We really appreciate you being here.
Thank you. Great to be on your show.
Thank you.
welcome back to Taking Stock. I am Scarlett Sieber from Money 2020, and we are live from Money 2020 in Asia in Bangkok. So I have a great guest with me today. We have Nikhil Joshi, who is the COO of Emergo. So welcome, Nikhil.
Thank you for having me.
So for those of you who don't know, tell us a little bit about who Emergo is.
Sure. Emergo is a co-founding entity of the Cardano blockchain. I think your audience is probably familiar with the Cardano. We're actually headquartered here in Singapore, which is what brings us to Money 20 in Bangkok this year. And we came out with a big announcement today. We're essentially, our roots are in Cardano, but we see ourselves as a multi-chain product company, and we are delivering something very big.
So you made a huge announcement. I mean, the internet, everyone is buzzing about it. People keep stopping me to talk about it. Can you tell us a little bit more about why now? Why is this so revolutionary today?
Sure. So Money 2020 is a really really good focal point for us to make this announcement today, because there is so much talk around crypto, around payments, around AI, DeFi, and the point that we're making is that all of this is going to converge. This has been talked about in a pretty binary way in some instances. We think it all comes together, and what it allows us to do is launch SecondFi, which is what I did earlier today on the intersection stage.
Yes.
And it's essentially a neo-finance platform, meaning that we believe everyone will have their first bank account, the one that you inherit because of where you live. You'll also have your second account, and that will allow you to be take control of your own assets, have self-custody. It allows you to make payments, micro payments, basically save, spend, send, stake, all of this stuff in your pocket with the fraction of costs that you would otherwise have for cross-border payments on existing rails. You can earn yield, and over time, as agentic AI comes into the picture, well, how are they going to transact with each other? Through stablecoin, once again, on blockchain. And as agentic AI becomes more prevalent, you need blockchain to keep it in check and make sure that what is correct is, inverted commas, correct.
I love that you've hit every kind of key point that we've heard over the last few days here at Money 2020 Asia. I love that you went into the convergence piece. We actually wrote a book, Intersection, around the convergence of TradFi, DeFi.
There we go.
And then between Emergo and SecondFi, we're making it happen. So where are you going from here? I mean, this was a huge announcement today. Let's talk about where we're going next.
Sure. So the website is open for the wait list. We will launch fairly soon, and over time we will, of course, our user base is predominantly Cardano. We will go past Cardano to other crypto ecosystems, and over time we just see, as we say, you will have your first bank, you will have your second account, and so over time people will be agnostic, not just chain agnostic, but agnostic as to whether they are dealing with fiat or they're dealing with crypto rails. And that's the way we see things going. So that is the market, and this is particularly important in emerging markets. So again, we're headquartered in Singapore. Southeast Asia is our playground. That's why it was super important for us to be here at Money 2020 this year, and really capture those markets that benefit, have real utility from what we're offering. The ability to make micro payments, to have cross-border payments at a fraction of the cost and a fraction of the time.
So many valid points right there. Micropayments are absolutely critical. Nikhil, thank you so much. For all of you, that's Nikhil Joshi, COO of Emergo, with the big announcement, the launch of SecondFi. You can find more on the website below. We look forward to seeing you next time.
Hello and goodbye. Thanks for watching. Have a great weekend. We'll see you again on Monday. There it is.